We'll take a break. On the other side, you'll hear from the Fortis management, Fortis Healthcare. They reported numbers yesterday afternoon. BhavdeepSingh is with Fortis. He's Chief Executive Officer at Fortis. Back with him.
Markets are at the day's high, 70-75 points higher, looking in very, very strong, at least in the first 1.5 hour of trading session. There you go at the day's high, and we can see majority of the move coming in the last 15-20 minutes. Similar with Sensex, mid-cap, small-cap also reacting, but it's more about the large-cap space today. Mid-caps are yet to react in such a sharp manner. Fortis Healthcare declared numbers earlier. The management is now joining us. CEO at Fortis, BhavdeepSingh, is now with us. So if you can first just to start with the numbers, there were a lot of one-offs in the number, but I believe at the EBITDA level, you all have done well. Can you just explain that?
I think the numbers were in line with our expectations. Whenever you go through the third quarter, perennially, the healthcare industry, like many industries, unless you're in the retail environment, the Diwali season, the festival season is a bit of a slow time. We're no exception. When people think about surgeries, when they think about procedures, typically people delay things. They don't want to do it at a time when family's around. So we see a little bit of a shift from what business typically might have happened in the third quarter, which we anticipate coming into the fourth quarter. So our numbers at a high level. On a revenue basis, we've come in at about 7% plus over last year, which is certainly a good number. We feel good about that. Slight drain, as I just mentioned, because of what happened with the festival season. On an EBITDA perspective, we've come in at a 14.5-15%, again slightly above last year, and fairly consistent with what our expectations were. I think what's happened, the other number that you've referenced earlier, is we do have an extraordinary, exceptional loss that took place this year, driven by a government-mandated bonus that quite honestly nobody was aware of, and it wasn't planned for by anybody in any industry. So that's come back and hit us. It's a one-time thing. I think as I look at the business, as I look and see what's happening in our hospitals, our revenue growth is solid, and we expect revenue growth to continue to approach the low single-digit, high double-digit numbers. Our EBITDA continues to get better, and certainly we feel good about that. We're doing a lot of work around bringing efficiencies in the system from a cost perspective, from a process and efficiency perspective, so certainly we feel good about that. And most importantly, I think the big thing that we're doing is we continue to work with our doctors and nurses to make sure that we are providing absolutely the best patient care in all of India, and we feel good about where that's leading us, because ultimately our brand is driven by the experience that patients have and how they feel after they leave our hospital.
Right. So when we talk about Fortis Healthcare, there are two businesses, diagnostic as well as the healthcare business. Can you break down both of that for us? Diagnostics have been doing very well. How did it do in Q3?
Sure. So the diagnostic business had a revenue growth of about 5% this quarter, and a little bit softer than we've experienced in the past, because year to date we're running higher than that. But on an EBITDA perspective, it continues to grow. We continue to open new diagnostic centers, continue to expand our lab presence as well around India. So the diagnostic business, quite honestly, the disease burden being what it is in India, continues to do exceptionally well. Our EBITDA number for the year is very, very strong. We feel very optimistic in terms of where that business is headed, and quite honestly, any diagnostic business is driven by the results that it produces with the doctors and nurses in hospitals. With the hospital business, our occupancy numbers were at 72%, which is a good number. We feel good about that. That's an improvement over last year. I think from a revenue perspective, we're sitting at about a 8.5-9% improvement over last year. And EBITDA again continues to be slightly stronger than last year. So I think that we are in a very good position. We are investing in our hospitals as we go forward. Our CapEx program is very aggressive. We continue to invest in medical equipment, in technology. We've just purchased our first robotics program. We'll be purchasing the second one in the first quarter of next year. The feedback that we're getting from our patients is very, very strong. And we are now starting to track clinical outcomes as well. So I think that when you look at both businesses, while complementary, while running parallel paths, are doing exceptionally well. And I think that 2016-17 will continue to drive great results for both of them.
So Sir, about 12 to 18 months back, you all had taken some steps in terms of capex, in terms of improving efficiency. Has that started to pay off in terms of the EBITDA numbers? Plus, you could also talk about the transaction that you've done in terms of buying 51% stake in Fortis Healthcare, as in the two hospitals.
It has. I think the efficiency piece that we talked about is going to an asset-light model. And one of the decisions we made was that, for many years, the story at Fortis was about growth. And while we've grown and we're a large hospital presence in the country today with 55 hospitals, 4,500 beds, what we are doing is looking at monitoring utilization and getting as much out of the assets as possible. We've also done that from a structure perspective and making sure that the way we're set up, the way we run our business, the way we conduct the best possible patient care of our patients, making sure that we have efficiency in that as well. So I would tell you that we're quite encouraged by what's happening. I think the other thing that I'd like to share with you, and you're probably aware as well, is that we've purchased 51% economic interest in FHDL, and that's it's a good move. We've repurchased. This is the portfolio that has our Shalimar Bagh and Gurgaon Hospital. It's an investment from our side that pays off in a very, very big way. At the conclusion of this deal, on an annualized basis, this is going to bring 200 crore EBITDA and 50 crore PAT to the bottom line. So great deal, feel good about it. Economic interest right where it belongs, back to Fortis, and certainly I think that's a good thing as well. So I would tell you that again, from an efficiency perspective, I think we're doing the right steps. I think we have more to do. I think for any organization, as you continue to mature and evolve, you continue to look and build more. I think technology is going to become a big enabler for us with respect to how we drive more efficiency. Sometimes it's not so much about what you do with a piece of equipment technology. Sometimes it's what's the new thing that you need to do around it. So all indicators are that we have lots of good things to look forward to.
So can you just explain that transaction again? What is that you're paying and what essentially will be the impact on the balance sheet? Will you have to take some debt or dilute some stake?
So this is a 51%, the transaction. These are two hospitals. The 51% economic interest we had sold 3 years ago. We had sold it at a cost of approximately 1,400 crore. We are now buying it back at 1,800 crore, which is about an 11%, 10-11% CAGR, which is very reasonable if you think about what's happened with these two hospitals. They've both done exceptionally well. Shalimar Bagh was launched in 2010. Gurgaon was launched 3 years ago. So I think the CAGR is well deserved based on what we invested, what we're paying today. From a financing perspective, this is going to be a net cash outlay for us of about 750 crore, and that's netted off the purchase price. Again, 51% was what we're buying, which is about 970 crore. We have cash available to us, about 550 crore. We were going to be able to monetize some assets that we have. And then we own 28% of RHT, so there's a dividend component. RHT has announced that they're going to be issuing a dividend, and so with those proceeds, our total purchase price will be about 750 crore, and most of it will be able to self-fund. There'll be a little bit of debt on a temporary basis, but as I said, 200 crore EBITDA, 50 crore PAT. It's just a deal that makes eminent good business sense.
So can you talk about the debt on the book? Because what I believe in the last 12 months, whenever we have interacted, you all have focused about reducing debt. You all have focused on debt as well as increasing capacity without investing any capex. So why this move?
Yeah, the debt that's going to go up is, as I mentioned, it's very temporary. This is we're not talking about years and years. We're talking about a very short period of time. Our debt today sits at about 1,500 crore, 0.03x, which is a very healthy number. I think in any organization for a business of our size approaching 4,000 crore, this is a number that we're comfortable with. I don't think, certainly our plan is not to take on additional debt. We are looking at some of our assets that we can monetize and bring the number down, but if we sat at this number, as I think about PAT positive, as I think about what we need to do for the business, as I think about having funding available for what we need to do, I'm very comfortable with where we are.
Right. Sir, SRL Logistics, any plans to monetize that particular asset separately? We've seen a recent listing in the diagnostic space which has got a lot of interest. Anything that you are looking at?
Listen, the SRL business is a fantastic business, and we're very happy with it. Our plan is to invest in it, grow it, because as we can see, based on the disease burden in our country, this is a business that provides a huge need for Indians all over the country, and we're just looking to make this a better and better business as we go forward. We're investing in it. We have a great management team led by Sanjeev Vashist, and we're just thinking about how to make this better and bigger as we go forward. Nothing else beyond that.
Sir, thank you so much for taking out time for us, and all the best for 2016. That was Fortis Healthcare, very, very optimistic about the acquisition, that the 51% buyback that they have done into 2 hospitals, as well as the overall outlook of diagnostic and the healthcare business. The name is down 3%, but I think after the numbers it was up about 4% yesterday. We're taking a break.